Aloha, everyone. Welcome to Java. Thank you for joining me on this Tuesday. This is for December 19th, 2023. Going to have kind of a low-key day, I believe. We've got the final of the week. We're heading into a holiday, major holiday on Monday. So as we head towards Friday, there's going to be less traders and the market will go light. So currently risk indicators kind of stabilizing. We've got the 10-year yield as well as the relative strength of the dollar. They're both lower. So they're staying low under pressure, which is allowing the stocks to continue on a slow climb into the green. So volatility down and futures agree. So we've got oil under a little bit of pressure, which I think will change. We can have larger moves today because there is low volatility, so they could be more significant. However, I do expect that we will have kind of a bumpy roll up continuing. So really what this means is with these prices all going up, the values going up, it's not actual value. What it is inflation. It's returning for now. So the suggestion is this might be the final or close to final opportunity to go into commodities. And I do expect we'll see this rotation soon in the markets, a little more significantly than it is currently. So oil, gold, silver, physical silver that you can purchase and hold, and then also Bitcoin if you're into the cryptocurrency, land in certain places. And this is not financial advice, so you have to do your own research, especially with real estate. It's very specific, but just to give you some ideas. So with our calendar, not much today. Building permits prior to the market open. And then Wednesday, we've got a couple of reports coming out. But I think that as we head toward Friday, there will be even less people in. So just a couple of things in the real economy. We've got mortgage payments falling because they are basically holding their rate steady. So they've come below that 7% at about 6.6. And Redfin put out a report saying they expect them to drop another 1% for prices. So that is bringing people back into purchasing homes that have been holding off. So it might bring up the supply. At the moment, it's making prices rise, but I think that's going to level out pretty soon as the supply comes on the market. So in a natural order, that's what would happen. We've also got in the background, more people are refinancing their homes, getting home equity lines of credit, trying to pull all the value they possibly can out of their homes. So depending on what they do with that equity will be very important in the coming months. So the other side of what they call sticky inflation, aside from housing, is vehicles. And this story is another report that just came out, but it's talking about how basically the value of vehicles has dropped over 20% this last year. So most Americans that got loans at this time, now they're upside down and they're not able to pay those car loans. And now their jobs haven't come up as much or they've lost their jobs. So now they're beginning to see more delinquencies and repossessions of vehicles and supplies starting to build up, which puts pressure on the prices. So if you're looking to purchase a vehicle, the time is coming. So we have the Pentagon launching Operation to Protect quote-unquote prosperity. So basically, because of the attacks that have happened in the Red Sea, all of the shipping has decided to take a longer route, and they understand also that that's going to create an inflationary environment, supply chain issues again, and then also, as we were talking about yesterday, this is inflationary because everything is either made with oil or shipped with oil, and that cost that they're taking to take a longer route and the time is going to be passed on to the consumer. So U.S. has kind of teamed up with others in the area, and they're kind of fighting back. We'll watch this and see what happens. But for now, longer routes in store. Increased inflation until they finish this, and I think we will be at war soon, which is also inflationary. So I wanted to bring up this story. It's about Credit Suisse. So they went down a little while ago. But what happened was FINMA actually took them over, and they are digging through basically all of their records. So the regulator is now coming under fire, and what they're saying, they have triggered the largest rescue of a bank since the global financial crisis of 2008 back Lehman Brothers days. So Credit Suisse is now they're basically the Lehman Brothers of Europe for today. And what that also means is that there are more to come. So even if they start cutting rates, it's gone too deep and more banks will be closing, although mostly smaller banks, not as large as this one. But it's not done yet. And there's going to be more mergers and acquisitions, and probably another larger bank as well that will either restructure or go down in the same way as a buyout, merger and acquisition. So, anyway, we've still got more things coming along, kind of that low key, quiet day. So, I wish you all a green trading day if you are, or just wonderful day in general. If you would please hit that like button, it does make a difference. And until I see you again, my friends, stay free.